This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to Digital Perspectives. You can follow me at Backup Bradley on Twitter and everything we're talking about here. Today, we are going to talk about a great interview with Jeremy Allaire and Brian Brooks, the OCC head, and Jeremy Allaire from Circle. And it is a fantastic conversation. And we are going to take that conversation apart, and I'm going to take you to the highlights, and we'll discuss some of those things. And they really are discussing, how they are going to move to decentralize the financial system while remaining inclusive. And it's an important conversation, and I'm excited for us to have that talk. Before we do, we're going to do the numbers. And before we do the numbers, I want to tell you, if you have not gotten onto the Rich List and the free monthly newsletter, please do that. First monthly newsletter will be out this week. This week it will be out. It will have an exclusive interview with Diana Adachi, formerly of Accenture, did the due diligence on Ripple, and now working with Greg Kidd at Yucca Labs and Hard Yucca. So definitely make sure you check out that and all the other content that will be in that as well. Guys, the numbers are brought to you by PureVPN. Make sure you protect your anonymity online. They have a 7-day trial for 99 cents in the link under my videos or the comment section, either description box or the comment section. Here we go. Bitcoin, $11,884.25. Ethereum, $426.55. XRP is 30 cents. Let's drill down on those numbers right now. 0.3039, we are looking at 2.4 billion in volume, 24 hours, and the total circulating supply right now is 44,918,000,000 plus, and the 24 hour is up about 2.5%. So those are your numbers. Let's go ahead and get into this, because this interview is something else. And I mean, shout out to both of these gentlemen for just an incredible conversation. Oh, by the way, I am now offering the course on course creation created by Dave Valiers. This is an amazing course. I'm taking it right now, and I love this course. And I'm able to offer it to you guys. It's very affordable. It's $47. And the reason I'm so excited about this course is because, for one, he will show you how he's been able to generate over 40,000 sales in just 6 weeks of starting this particular business. So make sure you check this course out. Look, in a time where everybody is losing a job or being furloughed, or to some extent they're having to recreate themselves or their income. I feel like all of us have a very special skill to offer, or skill sets to offer this world. And, you may find that this course creation, course creation will give you an opportunity to showcase some of your skill sets to people. This is an amazing course, so make sure you check that out. Now let's get into it. This is a remarkable back and forth here. Let's start with this first thing. It's the role of the stablecoin and the global reserve status of the dollar. Listen to this.
This discussion. So you've obviously been outspoken about the role and the potential of stablecoins, digital dollar stablecoins in the U.S. financial system. You've written about it. You've written op-eds. And you've certainly talked about it. What is the role? I mean, is it what you just said? Is this fundamentally just a major payment system innovation that is moving ahead, and the U.S. financial system should benefit from that, or how do you think about that at a really high level?
Well, Jeremy, I think there are a lot of ways of thinking about stablecoins. There's sort of a short-term, a medium-term, and a long-term way of thinking about how they can improve our sort of system. But what I think about it in the first instance is it's an issue of competitiveness. So when I talk about stablecoins, what I sort of say is the dollar has been the reserve currency for a long period of time, not because it's necessarily better or easier to use or anything. It's the most liquid currency because of a set of historical anomalies that happened sometime between the end of World War II and the mid-50s.
Right.
And the world we live in isn't that world anymore. So the dollar is still the reserve currency, but only because we're still running on that history.
Yeah.
The problem is the history is not likely to preserve our role as the reserve currency forever. And you see this in the fact that global central banks have been reducing their dollar holdings and diversifying away from the dollar every quarter going back now 4, 5, 6 years. This seems to be an inevitable trend. We're still the most important, but we're way less the most important than we used to be.
Right.
And in a world of competition, my view is that the dollar needs to transact more attractively than others, right? So if we're no more liquid than the renminbi or the euro or something at some point in the future, we could still be the currency of choice if the transactional mechanism for dollars is superior to the transactional mechanism of other kinds of things. And so
very powerful statements there, and it doesn't stop throughout this conversation. He's talking about the fact that the old system is really losing its luster. It's lost its luster. It's lost its efficiency, right? And we need to be proactive and preemptive in how we deal with that. And that's where the role of the stablecoin comes in. This conversation only gets better as it moves on. Let me scoot us ahead here so we can get right to it. And it starts right here. Let's listen to this. This will be him talking about the metaphor he uses, first of all, about payments and exchanges of, transactions being almost free, and about what the email was to the letter, the stable coin will be to the dollar. Listen to this comment. It's remarkable.
So it's sort of like, how do you turbocharge that? How do you put those together and just give the dollar, the superpowers of the internet?
That's right. Exactly. We used to call it the programmable dollar. The stable coin was to the dollar what email was to the letter. You're still typing, you're still sending information. But man, it's faster, and you can attach videos, copy multiple people, and it's free. Right.
I mean, this is the
wow. I mean, listen to what they're saying. I mean, these are not YouTubers. I mean, I understand that, Jeremy Allaire has his YouTube channel and a podcast, but this is the head of Circle and then also the head of the OCC. Really working on this task every single day. And it's just remarkable, the vision. As we move through this stuff, you're going to be blown away. At least I was, about the clarity they have in how to get this done. It is just remarkable. Let's keep this moving. And what a comparison, the stable coin to the dollar, what email did to the letter. Whoa, remarkable. Let's move to the next spot here. And this, we're going to hear about the consortium and how we get the private involvement into this effort. And he talks and starts to talk about the term that we talk about here on this channel all the time, public good. And they talk about the SWIFT consortium, which makes you wonder if we'll see some new consortium created to deal with, this new onset of stable coins in the digital dollar. And possibly, I've even had this conversation when it comes to XRP and the escrow as well. So let's hear what he says here.
How this happens, how this becomes more important in the financial system. And we have a history of electronic money innovation. People sort of say, well, we already have, electronic money. And that's true in that, back when it became possible to send money between banks, an association of private sector actors got together and created something called SWIFT. And that was a electronic messaging system that allowed banks to sort of let each other know what they owed each other. And that was electronic money. That was sort of the birth, but it was essentially a consortium of private sector actors that came up with, in that case, like a centralized technology. And then later in the 70s and the 80s, the sort of, I guess, the electronic money that everyday people became accustomed to were like credit cards or debit cards. It was sort of, I had this thing that wasn't paper money, it wasn't a paper check. It was this sort of electronified kind of concept of money that people could interact with. And similarly there, you had essentially private sector actors coming together, forming associations and consortiums, defining technical standards for interoperability to kind of make it work. And the U.S. government didn't need to come in and build that, right? That was something that the private sector could do. And those models sort of have kind of gotten us these innovations in electronic money. And now we're the next logical place, which is internet dollars. and internet currency. And is the private sector going to play a similar role? Basically, is the answer here, to really see this at scale? Do we need these consortium models and associations and sort of self-regulatory frameworks that sort of work within the broader mandate of the financial system regulations?
Just a remarkable setup. And listen to what Brian Brooks says here about mentioning public good and that public-private involvement here.
Well, look, so that's the inflection point that we're at right now, right? Is this the kind of thing that should be built by the government, or should we follow history and let the United States do what the United States does best, which is harness its strong, market-oriented, incentivized private sector to build something cool that everybody actually wants? Mm-hmm. What I would say is, I think that one way of thinking about where this all goes is the idea that there are public goods that don't necessarily have to be delivered by the government, right?
Public goods that don't necessarily have to be delivered by the government. Like the internet, maybe?
So there's such a thing as public ownership that is different from government ownership. And blockchain is the classic example of that. So, imagine a world where you started in American history with one central authority in finance, which was the first Bank of the United States. Mm-hmm. And that was the dominant central force in finance. Then decentralization was achieved in the 1860s when this agency that I work at was founded. Decentralization in the sense of, we decided not to have one Bank of the United States. We decided to have a network of privately owned national banks all across the country that would operate and interact with each other in a certain way. But there was now more than one of them, and there were multiple of them in every state, and that was thought to be a good thing. It was more resilient, more accessible to people locally, et cetera, et cetera. Then, as you described, various kinds of money transmission and payments technologies came about, which decentralized the system still further. Yeah. Those banks started creating networks of various kinds, SWIFT as an example. But think about the credit card networks, where what became the Visa network was originally Bank Americard. It was a single entity, right? And then they open sourced it, and those happened. What I always find puzzling when we talk about this is why, given that history, people now believe that the payments system is a government service. It's definitely a public good in the economic sense of there are benefits created by it that cannot be fully captured by the owners. So in that sense, it is a public good. But why do we think it has to be owned by the government when none of the things we've just described were ever owned by the government? My personal view is the ultimate public ownership of the payment rails is when you have a network like the internet of interconnected institutions and computers that are maintaining ledgers and allowing direct person-to-person transactions. So as you said at the beginning, the internet's the classic example of that. And so I think we're way down the path of decentralization. I think we're now maybe close to the point where we will achieve ultimate decentralization. Yeah. But we've been on this journey for 200 years.
Yeah.
This conversation is about stable coins, but they're talking about, a set of payment rails that are a public good, like the payment rails that are currently out there. This is exactly, in my mind, why Ripple has worked within the financial system, in the banking and the government systems around the world so closely. Because I have said many times that I believe the ILP and the XRP ledger become a public good. That's right, decentralized protocols becoming a public good, just like the decentralized protocols that are used for the internet that we're using to communicate with one another right now. I think that stems to a much larger conversation. And when he talks about those payment rails, I instantly think of the Consumer Financial Protection Bureau, who just recently cited GPI from SWIFT and Ripple and XRP as a solution to their new effective rule, which is to allow the sender and receiver to see all of the transaction and fees before hitting send on the transaction. Now, let's move forward. I want to keep this going because I'm telling you, this is just an incredible conversation. Public doesn't mean government. He's clarifying and drilling down further in this little spot right here. Listen.
Public doesn't mean government, right? It's something that can spontaneously spring up in a market.
Yeah. Right. And it is
something that can spontaneously spring up in a market. You mean like a universal ledger, like the XRP ledger? An ILP, which was gifted to the World Wide Web Consortium in 2015, and developers have been building on it. The World Wide Web Consortium is the international standards body for the internet.
is public in that the intellectual property is open and accessible to anyone. It's open source. People can freely contribute. The standards and the communities around them, people can gather to build those. So we've certainly seen that work in many spheres, and it does feel like with public chains and things like stablecoins, we're starting to see that happening in a nascent way in the financial system here. I guess
it's really remarkable what they're discussing here is a much bigger conversation, or actually deeper conversation, when you're talking about the payment rails that this stable coin world would live on, or all of the cryptocurrencies for that matter would live on. Let's jump forward now to 16 minutes, and here we're going to talk about stable coins, fully reserved, and fractional lending. And this is a really cool point that they make here. Listen to what they talk about here, about how it really kind of legitimizes stable coins and brings the confidence to people that they will be fully backed. Listen to this.
Well, so let's unpack that just for a minute, because there's a lot in that question. So let me start with the concept that stable coins are fully reserved and everything. So they should be, and the most credible recent projects have been. But we all know from some slightly less recent experience, if you went back a couple of years, there have been stablecoin projects that weren't actually fully reserved. And so one of the things I think that we in the regulatory community need to do is to provide some clarity about what are the reserve and audit expectations for these kinds of projects. There are plenty of analogies out there that would help us do that. There's the analogy of our experience with prepaid cards, with traveler's checks, with other kinds of money transmission instruments. But the first thing I would say is we do need to say something about that to give users confidence that if they're trading in a stable coin, they're no less likely to lose their money than if they have, a sports authority card or some other kind of instrument, some prepaid debit card that they can use. And I think that's a place where we can create some confidence. I think there's also another basic issue that everybody in this community needs to be thinking about and is thinking about, and that is when you're transacting on a blockchain as opposed to through the bank-built networks of SWIFT and ACH, et cetera, there are issues about customer identification and BSA, AML, Bank Secrecy Act, anti-money laundering issues that have to be resolved and are being debated, in the government as we speak. So you have to take those seriously, but you also have to take seriously the demand side case for direct person-to-person value transfer and balance those concerns to get to a place that has credibility with the public and credibility, that it's not principally being used for illicit purposes, which I don't think it is, but those are things you need to talk about. In the longer term, what I see happening here is, first of all, that having an internet native payment instrument is kind of inevitable. And when I say internet native, the problem with the internet today is there are a lot of cool apps on your phone that you can use to transact value, but because they're not internet native, they're not interoperable with each other. Exactly. So for example, Jeremy, if you have Zelle on your phone and I have Venmo, and that's all we have, we can't send money to each other. It's a weird closed loop. Even if we both have Zelle, we are still depending on the clearing bank clearing that transaction with each other. Versus in a fully open system, kind of like in the way that my Gmail and your Hotmail can communicate with each other.
SMTP or HTTP.
Exactly. Yes. Right. And the way that we know this is what's inevitably coming is look at the major payment systems that have arisen just in the last 10 years. So take Stripe as an example. There's a reason why most internet startups choose to use Stripe as their payments platform as opposed to using a bank as their direct payments vendor. And that is because Stripe is an internet native payment processor. They know what they're about. They're direct. They exist in cyberspace. They're not a software that is engrafted onto those protocols. And if that's the case with payment processing, it seems to be inevitable that internet native money would be the fastest and most ease of use way of transmitting value across those networks.
I mean, just remarkable what he's suggesting and what he's talking about here. He's talking about moving to a complete system that is really in the cloud, right? It's in cyberspace. That's what he's talking about. And I mean, that to me is it's just remarkable. RippleNet's cloud-based too. I just thought I'd throw that in there. All right, let's keep this moving here. I'm telling you, this is just a remarkable conversation. 20 minutes. They're going to talk about here for the next couple minutes, making payments and smoothing the payment system. And they talk even more about the internet native payments system. This is an incredible conversation. Here we go.
But just speed, efficiency. What are your thoughts on some of the fundamental utility value improvements that come from this shift towards digital dollar stablecoins?
Well, I mean, there are a lot that you can think of, but I'll just take a couple, which I think are relevant. So, one is, if you take the fact, which is a fact many people are not aware of, something like 70% of loan defaults are not caused by inability to pay. They're caused by forgetfulness, or they're caused by somebody's on vacation and they didn't come back until after the due date had passed. One of the features of stablecoins is because they're programmable. So just like with your email, I can send an email to you and I can mark it for future delivery at a stated time and the computer will release it. Imagine a world in which you never had to not only write a check, but even make a payment ever again. All of your debits simply transacted on the internet at a stated time and place and could be drawn on a given day. So imagine if you could just manage download defaults, late fees.
Improves financial health by virtue.
It improves financial health for sure. I mean, that's definitely one way of that happening. Another really interesting way that I think about it is, you may have seen, we recently chartered a new bank here at the OCC called Varo Bank.
Yeah.
And one of the things that Varo does for their customers, but imagine if this was universal, was they allow customers to receive their paycheck funds 48 hours before the funds hit. Mm-hmm. Well, in a world of programmability, if I could simply ping the system and ascertain that you have a paycheck coming in 2 days, and the blockchain shows me that, it's pre-programmed to release that on that day, then I, as your bank, would be much more comfortable going ahead and giving you access to those funds today. It wouldn't have to just be Varo Bank, but any bank could do that. So the programmability feature, the instantaneous settlement features, all of those things would be, I think, game changers. But to me, what it really comes down to is the idea of internet native payments.
Right.
The internet native processors have literally millions of customers who are merchants and other kinds of businesses doing business on the web. If you had a native payment system for that could transact globally, that could transact instantly, that's always going to be better than the current system, which has time delays, chargeback risks, and other kinds of things. I mean, the liquidity enhancement alone is a huge juice to the economy.
Yes.
Massive implications right there. Okay. And as we move through this material, I think it's quite clear that Brian Brooks has the vision, has the perspective needed to understand exactly what needs to happen from where he's at the OCC. All right, let's keep this moving. We're going to stay right here, actually, and he's going to talk about the cell phone as an analogy in the early day comparison and getting payment systems at near zero.
With a counterparty in seconds, with with very high levels of security, and with sort of third generation blockchains, we're now seeing transaction costs that can really get approaching zero effectively, in the same way we don't think about how much it costs to send an email. We don't think about a cross-border email. We just we have this free communications platform that everyone just kind of connects to.
Yeah, exactly. And I would just comment, Jeremy, that these things, in the public's mind, they need to evolve a little bit for the public to sort of understand what the current state of technology is. There was a time period, if you remember, where with cell phones, nobody wanted to use them because taking an incoming call cost the incoming recipient $1 a minute. Right. That seems ridiculous, right? But in the early days, that's how it worked. And then the pricing model settled down and the technology improved, et cetera.
There you go. And I mean, that's really pointing to where we've come, and no slight to Bitcoin, but where we've come from the early technology of cryptocurrency to where we've come now to something like XRP that settles very quickly, or a stable coin that even settles very quickly. All right, let's move to the next spot here. Let me mark this off so we know we're going over everything here. All right, our next spot is at 24 minutes. And let's listen to this exchange here. This exchange is talking about traceability, auditability as a regulator, and without compromising the tech and where we're going. And again, I think what you're going to see in this exchange, just like this entire interview, is the scope and the perspective that Brian Brooks has as he approaches the fall and the release of this federal charter. I think this interview highlights just how well suited Brian Brooks is to oversee the federal charter for the OCC and what's going on here.
Clearly cares a lot about these issues. How do you think about those issues, traceability, auditability, the ability for law enforcement to do their job?
Yeah, well, I think these are complicated issues that have to be taken seriously, by which I don't mean that there's only one issue that matters here, right? So I begin with the idea that money laundering and terrorism financing are unacceptable in our society, and we're in a world of elevated risk. I think we've known that since 9/11, and I think right now is about as unstable a period as any of us remember since 9/11. So those are important issues that governments have to grapple with. And as I say, we are grappling with it. My colleagues at FinCEN, at the Treasury Department, and other places are looking very seriously at what is the right way to allow this technology to grow without compromising those kinds of legitimate sort of public safety, national security kinds of concerns. Yeah. So I can't overemphasize that. At the same time, I think it's really clear in a free society that there is some amount of privacy, including financial privacy, that is an important value. I sort of think about the prevalence of secure, text messaging apps. There's a reason people use WhatsApp. It's encrypted end to end. Well, why do we allow that? It's hard for the postal inspectors to read your WhatsApp messages. And yet, as a society, I think there's a broad consensus that it's okay for people to have a sphere of privacy in that world. Yeah. Or if you take the iPhone, which was used by the San Bernardino shooters a few years ago to do various things, that was a classic example of an absolutely abhorrent criminal act that caused lots of death, and also had one of the iconic American companies refuse to unencrypt the phone because their belief is that their whole mission is to provide privacy. And, on the theory that hard facts make bad law, they didn't want that example to tear down this privacy structure that they had built. Yeah. So I think we have to ask really hard value questions as a country about how do we balance these concerns. Thinking that we can have private wallet-to-wallet transactions across blockchains that can't be traced by CipherTrace or Elliptic or whatever, ever, is probably a non-starter in a world where we have real enemies abroad that would seek to use, financial services against us. Mm-hmm. On the other hand, telling Americans that all of their private transactions have to be surveilled by the government at all times is probably not also a winning message. So we need to find a balance there. I don't know what the balance is, but I know that we're having discussions and we're going to figure something out, and we'll evolve over time.
And I'll tell you, this really does go to show the scope of, and the seriousness of what he laid out as an example of just how incredibly crucial it is to get this right from the first step out the door. Let's move this forward again here. And what do banks think about now that they can custody assets? And it almost has a slight shot at Bitcoin here with the 51% attack comment. Listen to this quick exchange.
So as this sort of gets more real for the established financial sector, obviously, banks are new to crypto. Your recent guidance has certainly opened the door for banks as custodians, as payment infrastructure providers, sort of to begin to open up to this kind of fundamental innovation. And I know, front row seat on this for the last 7 years. In the past, and certainly very much still, there's been a lot of focus within the banking sector on risk and compliance issues. As banks wade into this, what are the core risk and compliance issues that banks need to be looking at as they begin to add these kinds of rails, this kind of digital asset infrastructure, other things? What are the major issues for them to think about?
Yeah, well, so there are a number of issues, but I would start with the obvious issue of BSA AML, which we talked about. That's always going to be the most important thing in any kind of a publicly accessible money transmission network. So figuring that out and getting that right is always going to be, I think, job number one. But there are a bunch of other things too. So banks are used to managing the technology and operational risk associated with ACH and SWIFT.
Sure.
And by the way, those risks are not trivial. I mean, the percentage of chargebacks and fraud and other errors on those networks is shockingly high. Mm-hmm. So it's not like banks are not used to that risk or don't have practices for managing it. Yeah. But connecting to blockchains is a little bit different, because on a blockchain, you can't get the money back, right? Mm-hmm. So once it's gone, it's gone.
Right.
If you can get the money back, it's only through like a 51% attack or something, which is even worse than the money being gone. Somebody can rewrite the ledger if they have enough computing power. So at least on certain kinds of blockchains. So those are things that we need to think about, technology and operational risk for sure. And then, of course, there's the issue at a broader level, and this is not for an individual bank to manage, but it is something the system has to think about. which comes back to something you said earlier. It's sort of about money supply and monetary policy, and how do we think about these digitized assets.
Yeah.
Yes, they're fully reserved, and so the binding constraint is the amount of M1 that the Fed puts into the economy.
Yeah.
But as the velocity of money gets faster and faster, how confident can we be that at any given moment in time, those one-to-one relationships between reserves and stablecoins are being maintained? And if they're not being maintained, what does it do to the actual money supply? And since money supply affects interest rates and it affects inflation and other kinds of things, we need to think about all of those things. So I think there are a number of things to manage through. But what I come back to, Jeremy, is for people who say, well, that's a lot of risk, so I don't think we can manage through it. What I say is, it's inevitable that we have to manage through it. In America, in a market democracy, the consumer rules. And when you get to a place where 40 or 50 million people want something, they're going to have it. And it's only an issue of us doing the hard work to figure out what the framework is for it. I always come back to the Uber example. Every municipal government in America wanted to ban Uber. And the only reason they failed is because too many tens of millions of Americans said, no,
too good of a service. Yeah.
Unbelievable insight from Brian Brooks on that. I mean, 40 to 50 million people want something. They're going to have it. And again, these comments echo the sentiment of Jay Clayton when he was at the SEC, right? And he talked about in the congressional hearing, he's like, we can't fight it. We have to embrace it. Because if you fight it, they'll just innovate around you. And you're better off to embrace it. And that way you can actually affect what happens. And it is the right approach. There's no question. All right, just two more segments here of this incredible conversation. Let's go to 3143 right here. And I'll tell you, the comment he made about the velocity of money is pretty remarkable too, and how that affects, fully reserved stable coins as well as just the monetary system in general was a remarkable comment. Let's go right here. This talks about geopolitical, everything they're talking about is a geopolitical issue, and he is going to talk about the US dollar is used to buy oil around the world, and then makes a comment that even the Saudis have to use the US dollar to buy oil, and that can't last forever. Listen to this.
Around the world, and this is a geopolitical issue. It's not just a payment system innovation issue or an efficiency issue, and we're seeing countries such as China making digital currency and blockchain technology a core strategic focus. But I think here in the United States, the position of the government could be viewed as neutral at best. And there's certainly not, at least not yet, any kind of national policy or agenda on leading in this space. There's certainly a lot of private sector activity. Many of the leading private sector actors in this industry are here. There are many countries around the world as well. But is there something more to do here? How do we get there? How can the United States lead?
Yeah, well, so look, these are great questions. I wouldn't write off the United States in this area by any means, but I would definitely acknowledge that we are slow off the blocks and we don't have a single strategy that has been endorsed, at the highest level. But as you know, there are a number of people in senior roles in the administration and elsewhere who have really focused on this, and more over time. You have a CFTC chairman who has made it a public mission of his to grow America's leadership in this space. You have a newly reconfirmed SEC commissioner who's very focused on these issues. You have me. You have the chief technology officer of the United States who came out of Silicon Valley and is a crypto guy. There are a lot of people, more maybe than most people realize, in the government who are very focused on these things. I think there's both an optimistic view and a pessimistic view of the future on the questions you're raising. And the optimistic view would say, hey, it's actually great that China is doing what they're doing and what we're doing, and the private sector in the U.S. is doing what we're doing, because once you have stable coins and markets can have more of an influence in which currency they select, and as you put it, which economic system they want to participate in, it'll be harder for authoritarian regimes to prop up their currency artificially, as China has for many years. It'll be way easier for people to decide what that currency is really worth and to sort of bargain that down if that's the right thing. So bringing those market forces to bear, I think, has to be a good thing. The other optimistic part of this future also is, in a world where foreign exchange is a significant component of international trade, just the need to change dollars into yen or whatever to buy or sell commodities in Japan is itself like a 7% tax on the transaction. And imagine if you could take all of that out, because the yen never moved.
Productive capital.
I've got a stable coin, which is a representation of money that is held at the Bank of Japan, but the money's not leaving the Bank of Japan, so there's no foreign exchange.
Yeah.
That's the optimistic view.
Yeah.
The pessimistic view is this, which is, in a world where the dollar has been the reserve currency and is the price, it's the currency in which almost all global commodities are stated, Americans get an inherent discount every time we buy things on the global markets. Other countries know this. They think it's unfair. It might actually be unfair. And so in a world where there's that much economic pressure to use other currencies than dollars, the only way to maintain our primacy is to add features, right? If we can't lower the price, then at least we can add features and deliver value for money here, such that it's fair for people to trade in dollars because, hey, it's faster, it's more liquid, whatever. But in the current world, where we're the only country that doesn't have to change our currency to buy oil in Saudi Arabia, even the Saudis have to change money into dollars to buy their own oil, that can't last forever. And so we need to envision a future where we're being competitive as opposed to complacent.
Yeah.
Wow. He's telling you that the US dollar as the global reserve currency, certainly in the respect of buying oil, can't last forever. This new idea of, not idea, but this new adoption of this innovation is going to lead us to a new system. There's no question that's what he's hinting at there. One thing I would put a remark to is that talking about that, the U.S. has been slow off the block. One thing I would remind everybody on that, and it's not to challenge or be combative to Brian Brooks's comments, but I just want to remind everybody that in 2017, the Executive Order 13772 was put together, and that was to modernize the government and the financial system. And in that, I believe, is the framework in which Brian Brooks is pursuing what he's doing currently right now for, or in directive of that executive order. So I just wanted to highlight that also. So, okay, now final comment here is right here at 3548. Where does Brian Brooks see things in 3 to 5 years? And it's pretty remarkable what he says. Let's check this out.
Where do you see all this in 3 to 5 years, and how, in that time frame, how can this lead to very durable improvements in the U.S. financial system?
Well, so 3 to 5 years is tricky. If you'd said 30 years, I think I'd give you a more accurate vision. I think 3 to 5 years has a lot of dependencies on, does our economy reopen in the next 6 months? What happens with the presidential election? What happens with China on various immediate issues of national security. So, but what I would say is, if you kind of assume a steady state on all of those things, what I think will happen is 3 to 5 years from now, I think banks will be connecting to blockchains the same way that they connect to SWIFT and ACH and other networks.
Right.
Once they do that, the nature of banking will begin to change, because while banking will always, I believe, be the key on-ramp and the key value-add service provider in people's financial services lives, they will not be the bottleneck of the transaction of financial services. Instead, they will be nodes on a network along with a lot of other nodes, many of which won't be banks. And that will really change, I think, and allow banks to focus on what they're best at and what we really need them to do. So I think that will happen for sure. I do think that in a world of geopolitical instability, crypto assets in general will grow and become a more significant part of people's lives. That's one of the reasons why, I believe Bitcoin prices are going up in an environment of perceived instability, as people start to believe that the sovereigns are, maybe not as trustworthy as they once were. Bitcoin is not generated by any sovereign. Maybe that's a thing to hang on to. So I think you'll see more of that. But over time, the world tends toward more stability, right? Things reach equilibriums. And so since decentralized things are more stable than centralized things, I would predict that the movement that started 200 years ago with the first Bank of the United States, a movement toward more decentralization, will continue. Banks will adapt to that. They will add value to that, and the world will go on. But it'll go on in a cheaper, faster, more accessible way than it has before. And that'll be through the good work of people like you. So that would be my view.
Wow. I mean, just a remarkable conversation. That's going to do it for that. And I just want to say, after hearing these exchanges, I don't know how anybody could see that, Brian Brooks is not the perfect person. I mean, this guy knows exactly what needs to happen. And it has been thought about to a great degree. I don't think he's left a stone unturned. And obviously, there are things that still need to be asked and answered. It's not to say that he has it all figured out. He even says throughout the interview, there are some things that need to be resolved. We need to find the happy medium. How do we deal with privacy to stable coins versus the public use, right? And how much of that is actually private when transacted or not, especially dealing with things like, terrorist attack or illicit activity. However, I do think after, and certainly even before this, Brian Brooks has the vision needed to get this done. And I couldn't be, more excited about what's to come. I really am. And the idea that he says that banks will be nodes on a network, I mean, this is just remarkable where we're going. And it's not going back the other way. They have to embrace it. That was one of the narratives in this as well. All right, guys, that's going to do it for me. I know it's a bit of a longer one today, but this is what is actually going on right now. From the mind of Jeremy Allaire and Brian Brooks. Thank you to both of those gentlemen for sharing such a wonderful conversation. And I will catch all of you on the next one. Make sure you hit the like and subscribe, share with somebody you know. We'll see you on the next one.